Hello, everyone. My name is Deepak, and with me is Sanjiv Gupta, CPA. Hello, Sanjiv ji. Welcome to the show.
Morning, Deepak. Good morning to all people who are listening to us, seeing us.
Yeah, so all of you guys know we have that time of the year where we do our Wealth Summit. This year, Sanjiv has done something incredible. He has changed the way we organize the Wealth Summit, and I think 10x the value of content you will get out of this summit. Now, those of you guys have never attended this event before, it's from 8 a.m. to 8 p.m. on November 10th. It's Sunday for 12 hours of financial education. We will be talking about so many strategies that you will be just completely blown out. We will talk about some of the things that we have never talked about before. We have eliminated some of the things that we have talked about before. So you will see a lot of different options in this year's Wealth Summit. Sanjeevji, believe me or not, I have few people actually coming to join the summit all the way from Texas and some of the other states as well. So that'll be kind of interesting to see this year. Those of you guys who were at the summit last year and wondering, hey, should I come back this year? I think you will find incredible value. This year, we are digging deeper into finances, finding some advanced tax strategies that you guys can use to reduce your taxable income. So we'll definitely talk about all that. So, Sanjeev ji, I have a lot of questions piled up from you for the last couple of weeks that people have sent me that I would like to ask you. But before I go there, anything you want to talk about Wealth Summit?
Yes, so the Wealth Summit, we have been doing this for last 12 plus years. And of course, the content of the Wealth Summit is always, there's a lot of information, of course. And not only from the tax side, but we also have different kinds of areas like financial planning, estate planning, corporate matters. We have people who are run successful businesses presenting themselves. They have different kind of they took the booths and everything, so you can interact with them. And on top of it, it's not about entertainment; it's about seriousness, about financial information under one roof. So a lot of people do ask me this question: Whom should I connect with? How should I start with? Where should I go? All these answers to those questions will be under the Wealth Summit. It's under one roof. A lot of tax experts, financial experts, attorneys, which are there. So you can interact with them. Realtors, famous real estate agents are there. Residential, commercial, mortgage brokers, banks, you name it. So it's a
ADUs, short-term
ADOs.
rentals.
Is all these are very like where can you find this kind of gathering of all the people under one roof, different experts? I've not seen myself. So if you have not attended this, you need to come and register and see for yourself what we're talking about.
Yeah, and the only thing I want to add to that, Sanjeev ji, is last year we had some financial professionals who joined the summit as regular attendees. That created a little bit of conflict with some of our other vendors. So if you are in a tax business or you are in an insurance business or some sort of finance business, then I strongly urge you that you reach out to me before registering for Wealth Summit because those tickets are for regular attendees, not for finance professionals. So please understand that. If you are from those fields, talk to me before registering for the Wealth Summit. But for everybody else, please go to sanjeevcpa.com and register. Now, if you register right now, we're also giving away 4 free tickets to the Diwali Mela, so you get those. But once the Mela is over, you will not be able to get those. So that's a good $40 value there. All right, Sanjeevji, you ready for Q&A session? So
Yes,
I
yes,
have
yes.
lot of questions. So, but by the way, this is a great show for you guys to watch. I'm going to try to do this on a regular basis with Sanjeev. That way, instead of listening to something else, you guys can improve your financial knowledge, which is very hard to get these days. All right. So, Sanjeevji, my first question to you is I have not filed my taxes since 2021. Wow. And I purchased a couple of real estate properties. Can I do a cost segregation on those properties and apply those depreciation to my 2021 and 2022 returns?
Yes, so very good question. And like like we are amazed. We are the how the people when we look at the tax returns, lot of times we see that they do not even file the returns. They just come here. They say, "Oh, I forgot to file this year. I got a notice from maybe from franchise tax board, maybe the state tax board, from the IRS." So then they like hurry up. They're filing the returns. So sometimes it happens, maybe for maybe medical purpose or something. So answering to that question, definitely the 2021 tax return, the due date is April 15, 2022. So you can file the return 3 years. It means you still have time, 2025. So you can go ahead and do the cost seg. Of course, if it helps you become, if you are a registered professional guidelines, if you meet those guidelines, cost segregation can help you to accelerate your losses, use that losses against your W2 income or any other active income you have. But if you don't have that, or you're not a real estate professional, it does not make sense to do cost seg, because you don't want to have accelerated depreciation and creating more losses which you can just carry forward, and then will definitely recapture also at the end. So it doesn't make sense. So cost segregation is not for everybody, but it depends upon scenarios.
Yeah, I think one benefit I do see, Sanjeev, here for this particular person, I'm assuming they are real estate professional. That's why they're asking about cost seg. Because if you're not, then cost seg not, or maybe you have an Airbnb. I think that could be another reason why that might be helpful. But I think the real benefit here for you, if this strategy worked for you, is if you don't do cost seg, there's going to be a lot of interest and penalties. And by reducing your taxable income, I think those penalties will significantly reduce as well. So there is that hidden benefit for them. Wouldn't you agree?
I agree, but again, like a lot of time people get confused between real estate professional and real estate investor. They try to do their taxes online, and they forget about active losses and passive losses. Of course, they are not CPAs and they're not tax professionals, so they just rely on the online softwares. So just be careful on that. You need to be a real estate professional, means you need to have at least 150 hours or more, spending time managing the real estate if it's long term. And if it's short term rental like Airbnb, make sure you have 100 to 500 hours of your time active involvement in that managing that unit as a hotel unit. We call it sufficiency of services.
Yeah. And other thing I'll add here to that point also is because you have not filed the return for last few years, and now you're using some of these aggressive strategies to reduce your income, it kind of looks off from an IRS point of view. So keep in mind, whatever you do, it needs to be really buttoned down and make sure you're not running a risk of audit. So I would strongly recommend that you set up an appointment with Sanjeev, especially if you're in local Bay Area. But if you're anywhere else, you can still set up an appointment with him
Yes.
via Zoom as well. So that's not a problem. But if you're local, you can come see him in one of his 4 offices. And just, let's talk about some of the other things that you might have going on in life. Like, what kind of W-2 income you or your spouse had, if any, that would have a major impact. If you had any kind of capital income or losses, that can have a major impact onto it. RSUs, there's always situations that you're not telling us about. So before moving ahead, talk about all that stuff. But at the basic level, you can do cost segregation, and you can apply it to your prior tax returns. That is not a problem. So Sanjeev ji, at the Wealth Summit, are you going to talk about cost segregation in details so people can understand how that works
Yes, yes, of course.
if
This
we're
one of
not
the
using
various topic we have. Yeah.
that will be one of on the agenda. Okay, all right. Uh, as someone who earns W-2 income, are there tax saving opportunities if I purchase a long-term rental property?
Yes, again, the
So,
same rule, like we just talked to the previous person question. So just be careful, like where long-term strategies, again, we can go into this for very much detail, but I don't want to take so much time. But the long-term strategy, long-term rentals definitely is, again, you have to fulfill the requirements of 150 hours, real estate professional requirements, managing the long-term rentals. It also depends upon which state you are in, where the long-term rentals are located, how you're managing it. Again, it may or may not help, depends upon scenarios. So it's better you consult with a tax professional, and see what situation applies and is appropriate for your case, and take it from there.
all right. Here's another cost segregation question. By the way, we did a webinar on all this stuff last month. So we do this webinar once a year, maybe look forward to it next year, where we kind of dig a little bit deeper into the real estate aspects. But it looks like some of these are related questions. My CPA are expressing concerns about cost segregation. They're saying that there could be property tax issues in my state, and it's very expensive to go get the cost segregation study. What is your opinion on this?
Yes, so cost segregation is never for raising your prices for the property or doing an improvement addition to your property. Is for tax purposes only, nothing else. So again, I don't know why he said that. Being a CPA, I respect the CPA's community. I don't know from which angle he's looking at it. But what I know, what the question is, answering to that question, it does not increase property taxes, more for tax purpose only.
Yeah, I cannot think of anything. What does property taxes would have something to do with? Now,
Yes.
I mean, I can make a guess. And my guess is that you are probably converting your personal property or investment property from your personal name to an LLC.
Again,
When
it's
you
a lot of
change it,
assumptions.
and
Yeah, a lot of assumptions, but we don't know, right?
yeah, but that'll probably be the case. What might trigger reassessment of property taxes?
Right.
So that's the only thing that comes to mind. Other than I cannot think of. I would need more details to kind of dig deeper into it. All right. What are the benefits from switching from an LLC to S-Corp? That's a good question.
Yes. So technically, there are a lot of benefits. First is the self-employment taxes you save on the profit from the S corporation. If you are in California, you save the LLC gross fees on the revenue. If the revenue is more than 250K, it can go up to 11,000. But again, it's a comparison between 1.5% California tax you pay on the net profit versus California LLC fees you pay. Uh, it helps in that way. And then S corporation are more better in terms of operating the business, means running the operations, because it has more liability protection when it comes to, because the corporations are very long in history. They have a long database. They have a lot of court cases. But LLCs are very recent. Uh, they are not, of course, it can form with the Secretary of State, but there are not many court cases. It's very important for LLC to maintain real estate, to manage real estate. So if you have real estate or any valuable asset, you put an LLC. But LLC provides a lot of flexibility, which is not there for S corporation. In terms of who can be the members, in case of S corporation, you have limited number of shareholders who can be the shareholders, not like only individuals, trust estates, but not any foreign entities, not any LLCs, not any other S corporations. In case of LLC, you have that flexibility. Plus, you also have the flexibility in case of LLC, how to allocate income or losses to your partners based on special allocations and other rules that applies to LLCs. So at the time where you have to make a judgment, you don't have to make a judgment call. You have to really talk to your tax professional, see your scenario where it really makes sense to convert LLC to S corporation for tax purposes or remain as LLC. It depends upon the state. It depends upon your tax situation. It also depends upon a lot of considerations. So it's not a quick answer to this question. It depends upon each individual cases. And again, connect with your tax professional CPAs and see that you make the right decision. Then don't try to make decision by yourself.
Yeah, so the only thing I would add to that is we also need to take a look at what kind of profit your company is generating, what kind of income you're generating. It might not necessarily be the right thing to do in all cases. So probably want to look at it from that point of view as well. Okay, so how to convert 401k into an IUL or a Roth without a large tax hit. So that's an
Well, I'm not about, I cannot say about IUL, but I can always say talk about 401k converted to Roth. Now, when it comes to Roth conversion, it depends upon a lot of factors. It depends upon AGI calculations. What's your current tax bracket? What will your future income earning capacity? What type of investment you have done? What types of write-offs you have? Uh, because if you're making substantial income, converting Roth doesn't make sense right now. Uh, of course, you can say in the future the income the tax will increase, but it also depends upon your write-off, what things you have, what type of lifestyle will you manage. Uh, Converting Roth, it makes sense to pay taxes if you can manage your investments and you can make the growth tax free in the future. But it's not for everybody. You need to evaluate your situation, your income levels, your financial situation, your goals, your aspirations, when you want to retire, your family aspirations, your future income future income, what income will be in the future. So all factors are there. Again, it's important to do a consultation appointment, and then based on that, you can decide whether it makes sense to convert now or in future.
Yeah. And I think because I do quite a bit of business in insurance, so I think I can read into this question. What happens is, Sanjeev, a lot of time insurance agents will tell clients that take the money out of 401k and fund an IUL policy, and then take the money in retirements as a tax free from IUL. That's the kind of sales pitch people make. But honestly, that's a fake sales pitch. It doesn't work. The numbers are not in your favor. First of all, you will pay penalties, then you will pay taxes on your 401k, and then these IUL policies are also not withdrawals. Actually, they're loan against the policies, which you also have to pay interest on it. So when you do all the math, that strategy doesn't work out. So if anybody telling you this strategy, I would say run away. Um, or for that matter, anybody presenting you insurance as a product for saving taxes or as an investment, those two things should be your red flags. Because I hear that all the time. Anytime they say something like that, I strongly urge you to set up a consultation, either with Sanjeev or myself, and let us review that policy. And we'll be able to take a look and tell you exactly why that is not true. So I think that's what's going on in here. So be careful with that. How to claim a home occupied by children attending college as a rental property. Okay, so
Very creative.
that's an interesting one.
Yeah, very creative. But again, the kids are kids. They're dependent. They don't have their income levels. So they're working or they're studying. So you can't have a creating a dependent kid as a rental for your home when they are residing with you and dependent on you for food and clothing and everything, and you providing more than half the support. So I think this will not work.
Yeah. So what Sanjeev is saying is, look, if you do want to rent it to them, first of all, you have to charge them the market rent. So if you charge them the market rent, that's an income to you. So that is of no benefit. I think there are other ways to do this. If you want to do this, maybe the kids get some other kids to share the room with them or the house with them. That strategy could work. And then, in some cases, depending upon how you structure it, IRS may also see it as a gift to your kids. So be careful with as to how you're trying to do that. Uh, some people, I think, they look at it as because of this $10,000 SALT limit, so they try to convert everything into a investment property, try to get around that. I know
No,
that
no, no.
happens a lot.
That's manipulation. So yeah, that one has to be careful.
Okay. I have multiple W-2 jobs, and they are under withholding my tax.
Right.
What should I do?
Yes, a very common question. People, we see it every time when they look at the tax returns. They say, "I pay so much taxes. Why am paying taxes now?" One reason for that is their withholding is so poor. The reason for that also is the W-4, the withholding allowance certificate. Uh, they, it has been changed since 2 years back. A lot of changes were there on the certificate, taking into account the spouse income, the income from other sources, and what you do, how you elect yourself as single, married, or what status, or your voluntary amount you want to take out from your paychecks. So, but still, the people make it a mess of that W-4, and because of that mess, the employer don't take the taxes out properly, and you end up paying taxes with penalty interest. So, always think this way: if you're filing joint return and both of you are working, and you're making more than 400K, then it's always better, always better to have to select the state as single. Never take as married. Then because both are working, and you can maximize your 401k. That's the max you can save taxes on pre-tax. Other than that, there's nothing on H1, on not H1 W4 or the W2 that you can save taxes. So it's better you select a single, or you select a married filing joint, but you can select a voluntary deduction, taking out money based on your income levels. Again, it's based on a lot of factors. Uh, Again, it needs to discuss in detail with your tax professional, CPAs, sit down with them and say, of course, if I am paying taxes now, what can I do to properly withhold my taxes? So either I don't end up paying more taxes or getting refund or paying tax at the end and with interest and penalties. So that that uh, that sitting with the CPA is so important for doing the right withholding of taxes. And if you do it right now, is important. The other scenario that can happen with the wrong withholding of taxes is the situation that you have in the companies. For example, you
Yeah.
might be changing jobs, you might get a good bonus, the company might be acquired, uh, so they might have given a lot of benefits, and you don't take care of the withholding taxes. What about RSU vesting? Uh, what about exercise of those ISOs? So a lot of scenarios are there where your withholding can go anywhere. You might have done properly W4, but situation might change during your employment. Or you have started business, your business is doing substantially well. So a lot of scenarios are there. So just talk to your tax professional, CPA, sit down with them, and make sure that you do the right things.
Good. And only other thing I'll add to that, Sanjeevji, is if that is the case, then you really need to make timely estimated tax payments. That's the critical part, because regardless of whether somebody withholds the funds or not, it's still your responsibility to pay for taxes. And if you did not make those payments, they will come back and bite you later on. I don't think Sanjeev can save you from that. So so make sure you do pay your
Everybody needs
taxes.
to see. Everybody needs to pay a fair share of taxes. There's no way. I don't want to pay taxes, but again, if it's legitimate, I can do whatever I can do legally and factually to save taxes. I will do it. But at the end, you have to pay taxes. You have to pay taxes. Everybody needs to pay a fair share. I keep hearing this every time. "Hey, my friend is living. My friend is not paying taxes. Why I'm paying taxes? We are in the same company, having the same income, having the same." But even like I keep saying, if you're living in one, if your neighbor is living in the same house like you're living in your own house, still the real estate will be different. How they're composed, what are the floor plans and everything. So every personal situation is so different from others. When it comes to filing the taxes or preparing taxes, the status can change, the income can change, the credits can change, the investment can change. So a lot of things are there.
All right, so this one is an interesting one. How can the IRS prove we as owners used our short-term rental for more than 14 days or 10% of rental days?
So it's not
So
the
you know,
IRS proving. That's the first thing is wrong. Never, ever IRS prove anything. You have to prove to the IRS whether you did the right things. Okay, you have to provide logbook. You have to provide all those scenarios when you went into that home. What about utility bills? What about uh, driving to and for the log of your travel? So all those things are important criteria. And your ticket if you're taking air travel. So all those things are important consideration, but documentation is key, and understanding documentation is also important. But it's not never the IRS will ask you in case of audit or notice from the IRS. It's you who need to provide the documentation, not the other way around.
so Sanjeevji, I actually was helping a client with an audit, and it was an interesting case where somebody had claimed that they had, not used the home and it was a rental property, and IRS actually pulled their electric bills, and they proved to them that if you were not at the property, then who was? Because you were not collecting rent.
Absolutely, absolutely, and not the
You know,
electrical bill, the water bill. So there's a lot of the garbage. wells.
Yeah.
So it's a lot of things. They can look into. And
Yeah. Don't be
the things have
surprised if they
changed.
even pull up your
Yeah.
cell phone geolocations and
Oh,
all that.
of course, and of course the social media.
Yeah, and social media. You're always telling people where you're traveling,
Of course, they
whatnot. So
have
be
access to
careful
the
with
social
that.
media.
Like Sanjeev ji rightly said, that the proof would have to be you. You have to prove that you did not use it. And those of you guys who don't know what we are talking about here is the idea is if you have a rental property, especially for a short-term rental, like you're putting on Airbnb or something like that, in order for it to be considered a rental property, you cannot use the property for more than 14 days. And if you do, then all of a sudden it's no longer available for your short-term rental strategy. So that's what he's talking about. So those of you guys who have a short-term rental, Airbnb or something like that, be careful with that. Now, if you're working on a property, you're doing any kind of repair or something like that, then that's okay. That's a different story because you're still, working to make that property available for your customers. But other than that, you cannot use the property. And that includes your friends, family members, even people you just say, hey, you can use my property for free. If you're giving it to free, that will be considered as personal use and you will lose out on that strategy. So be very careful. This can come back and bite you. All right. Sanjeev, do
If,
you have more time to take more questions or you have?
no, I just want to finish today with one more thing. When it comes to audit, uh, I want to give an example of an auditor that happened in like recent past. So a guy was audited. He came to us. Of course, we did the audit work for him. We talked to auditors and everything, took care of him. But that person was saying that I don't. The IRS did ask that question: Are you making money? He said, "No, I'm not making money. Of course, I'm losing money. Of course, I'm running a business. But hey, I do not take any money out, and I'm not. I'm very conservative with my expenses." So then the IRS pulls up his social media account and asked him, "Hey, you're going here. You see, you're posting a picture. I'm in Iceland. I'm here. I'm there. How did you go there? Who paid all those trips?" There was no answer. So just be careful before posting on social media and saying, "Hey, I'm here. I'm there. I'm eating food here. I'm doing this. I'm dressing up like this." Just be careful. The iris aspect is also there.
Yeah. And I think it's very hard to hide all these things, Sanjeev. Even if you don't put it on social media, your neighbors knows, you know, your friends probably know. And
But
most
social media,
importantly,
yeah, but social media is open to everybody, right?
yeah,
They
then they
can
will
iris
immediately
record
know.
is
Right.
they can always see that. He said they put the name, they have access to all social media links and everything, and they pull up everything. And you cannot lie to an IRS officer. Just be careful on audit.
So Sanjeev ji, it's almost 10 o'clock. I know you need to run at this point. I have several more questions. I'll ask those next week because you're still here. Sanjeev ji is still in town for at least, I think, next 2 more weeks, Sanjeev,
Yes.
correct?
Yeah.
So if anybody wants to set up an appointment with Sanjeev, right now is a good time. Even though we are in tax season, but if you have a complicated tax situation, you need his help, he's still available. You can set up an appointment. All 4 offices are open. If you haven't filed your tax return, then this is the time to reach out to us. Just go to website sanjeevcpa.com and set up an appointment that way. If we can help you in any way and you don't want to go for consultation, just put your comments below the video and I will try to ask those to Sanjeev directly in our next video session. So thank you so much, Sanjeevji, for taking out your time and sharing your information with us. And I'll see you next week.
Thank you, Deep. Thank you.